In the last 30 days, the average trader using the specific options bot system has made $4,051. That's right, over 100 people just now implemented this system into their trading, and the results are crazy. Here's an example from someone who made $613 in their first 30 days, $26,000 in their first 30 days, and a $1,261 return in their first 30 days. Now, again, I'm not saying that's typical, that's average or whatever, but installing this system has changed a lot. Why? Because it removed the confusion and it gave them clarity so they know exactly what to do at any given point in time so they can make money as an options trader. So let me walk you through what this options bot system is. Number one, we need to understand what the market is doing. So when it says, what is the band zone? If you don't know what this is a decision tree where you go, if this, then that, so you follow it through so you know exactly what decision to make. So first thing we start with is, what is the band zone? Now, I give all my coaching clients access to this proprietary trading indicator that I call the market analysis band, that it shows them which market we are in. So you can see here, this is what this band looks like on a chart. When we're in the green zone, it means we're bullish and the market's trending upwards. When we're in the red, it's bearish. When we're overextended, it's overextended to the upside. When we're overextended down here, it's overextended to the downside. So that's what each one of these sections means. So right here, this is called extreme bullish. We're overextended. This green is called bullish. This is called neutral, where we have this light gray area. This is called bearish, and this is called extreme bearish, okay? When we put all these together, we then now have 5 different outcomes that we can have. So we look at the band and where is the market right now. We can see that it's currently in the pure green zone, which means we're in a bullish zone. So to take advantage of this, we go, okay, we're in the band zone of bullish. Perfect. We pick bullish as our zone. Now from here, we filter down. Where did we previously come from? Did we come from the extreme bullish zone, or did we come from a neutral zone? So if we come back here, you can see how simple this is. We did not come from above here. We came from below. So since we're coming from below, that is a neutral zone. So we're coming from a neutral zone. Inside of this neutral zone, that tells us we are going to be 100% bullish on our trades. So that's awesome. We know, okay, we're going full in with the trend. We're going to follow it. We're going to make money that way. If you have a futures account, F stands for futures. This is our go-to strategy, the 1-1-1 type of strategy. If you're a non-futures trader, you can go short put or put credit spread, depending on your account size. So that's how easy it is to know that no matter where the market is or what it's doing, how we can handle it. Now, that's an example for this current market right now. But how do we adjust for every type of market? We're in extreme bullish zone. So say the market is overextended to the upside. Quite simply, we're going to be trading bullish. We're going to be making money to the upside because we don't want to not make money when the market is trending higher. But we're also going to have on some bearish trades so that in case the market turns around, we can have that protection. So here's a great example. You can see we're in this red zone, but the market is trending higher, and we don't want to not make money when the market is trending higher. We also don't like fighting the trend. So we're going to be, and 50% of our trades will be in bullish trades to make money to the upside, and we'll have 20% of our money inside bearish trades so that we can make sure that when the market rolls over, we can then close out the bullish trades and let the bearish trades run and profit, reset 30 days, and then get back in and start trading to the upside. So that's how that works for the extreme zone. Now, if we are in a bullish zone, but it came from up here, came from the red zone, came down, we're going to stick with our 100% bearish. Why? Because the market was overextended, it snapped, and now it's pulling back in. Oops. Let me go back here. And so as you can see, every time we break into the red, we tend to have a snapback or some type of pullback that follows. And so just because we're in the green zone doesn't mean it's going to be good to trade. We want to make sure that it's coming from below so the trend continues higher. If the trend comes from below, that means the market's trending down, and we don't want to do that. So that's the bullish zone. Now for the neutral zone, when we're inside this middle range, this is where anything can happen. This is where we can either go bullish, bearish, or just stay flat and do nothing. And so there's a lot of different scenarios for when we're inside of the neutral zone, and that is looking at the current trend. Over the last 30 days, what is the trend? Now, this is super easy to assess. You go, okay, the market's here, and where was it over the last 30 days? So if we go out back 30 days, you can see right here is June 12th. If we go back to simply just May 12th, you can see it's right here. Cool. Are we higher or lower? You can see from May 12th to now, we are higher. So that means we are in an uptrend inside the neutral zone. And so that's how we know what trend we're in. So it's super simple so that you always know what to do. So if we're in an uptrend, flat trend, downtrend, these are the game plans. AKA we're playing all sides of the market in this type of scenario. We're playing both bullish, bearish, sideways, things like that. Now, the easiest way to explain this is by trading a strangle, basically when you're in this zone. Why? Because we don't know where the market's going to go. It can easily go down, it can go up, it can do whatever. And so we want to make sure we're able to capitalize from the movement, whether it just stays still or goes up. Because guess what? If the market stays flat with a strangle, we make money in this zone. If the market breaks higher, guess what? We could just cut this as a loser and then let this run, and then we keep trading bullish. All right, guys, if you like this system, if you like how detailed it is, click the first link down below, and I would love to schedule a one-on-one call with you to walk you through how this can be implemented for your trading and how you can completely automate it as well, so that not only are you following a proven system that adjusts to the market in real time, but it's completely automated for you. And if you want to do that, click the first link down below, and I'd love to help you out. So now that we covered the neutral zone, let's talk about bearish, okay? So when we're in the red zone, the market is trending down, and that means that it is a bearish trade. So a bearish trade could be things like buying puts or buying a put debit spread, something like that. We're going to take advantage to the downside. And now this has the same type of setup as the bullish one. Where did it previously come from before it entered the bearish zone? These are important questions that, regardless of whether you use the system or not, are things that you need to know when you're putting together your own options trading system. And so you can see right here, previously neutral zone, previously extreme zone. So if it previously came from the extreme zone and now bouncing up, we're obviously going to be 100% bullish because the market is rebounding. Now, if we came from up here and we're going down, obviously the market is continuously the downtrend. So that's where we're going to play the 100% bearish. So you can see previously neutral, we're playing a 100% bearish. If you don't want to play bearish trades, you can just be no position. That's still a lot safer than being in a bullish at this point. And then if it's extreme bearish, that's aka the market is bouncing to this. And again, futures, our go-to strategy is the 1-on-1 for bullish, and non-futures is going to be a short put or put credit spread. Now, if we're in the extreme bearish zone, that's when we start flipping over trades, and we go with our free money bot as well, which again, we have bots that trigger in these specific scenarios. They don't happen. The market doesn't get to these extreme zones often, but when they do, you can set up strategies that have virtually a 100% win rate, and that's what we call our free money bots. Anyways, that is the 4-bot system that I have taught my clients that they've been using and been able to implement to generate consistent income. Why? Because it's not just predicated or determined, or the outcome is based on one single strategy and one good market. It adjusts to what the market is doing, and it's super clear what to do at any point. And again, if you want help with this and you want this system installed in your system, click the first link down below, and I'd love to hop on a call with you to walk you through how this can work for you.